Hi everyone, welcome to Investing Mania. Terry here. Are you a dividend warrior that always look for high dividend paying stocks? I recently came across a stock that pays a forward dividend yield of 86% per annum.
What?
Yes, you didn't hear it wrongly. The stock price is around $31.48 and they pay out $27.10 dividend for the past 1 year, and this is how it makes up to 86%. But is it an investment that can let you retire comfortably? Or is it just another over-promising company that will lead you to the doom? Let's find out. Today's video is sponsored by Webull. If you sign up a Webull account from now till 30th September 2022, you will get free $130 worth of Tesla share. What you have to do is just to make and maintain an initial funding of 2,000 Sing dollar, execute one buy trade of either stocks or ETF on the US market, and execute one more buy trade of options on the US market within 30 days. Besides, Webull also provides zero commission rate for US stocks, options, and ETF trading. You can even buy fractional share in Webull and set recurring buy on the stocks you want to purchase. If you are interested to get a 9% ROI in 1 month, you can use the sign up link in the description below. The stock that I mentioned is ZIM Integrated Shipping Services Limited, ticker ZIM. ZIM is an international cargo shipping company and one of the top 20 global carriers. The company was originated in 1945 and headquartered in Haifa, Israel. Their revenue composition is 98.24% from shipping, and it is generated mostly from Pacific and intra-Asia shipments. Despite having their IPO in January 2021, ZIM has actually been in the business for 77 years, so no doubt on their ability to survive as a company. As of 7 September 2022, ZIM's market cap is $3.78 billion. The stock is trading at $31.48, down from the 52-week high of $91.23. ZIM paid out dividend of a total $27.10 in the past 4 quarters. If you compare with the current share price of $31.48, it is a whopping 86% forward dividend yield. But can the dividend sustain at such a high level? Definitely not, and here is why. During COVID-19 period, cargo shipping company enjoyed a crazy rise of sea freight rate, which went up to as much as 8 times of the pre-COVID rate. This is because the sudden surge of e-commerce due to the COVID lockdown in many countries. ZIM made tons of money during this period and scored a trailing 12-month EPS of around $52. As the company has a dividend policy to distribute 30% to 50% of their annual net income, it paid out the amazing $27.10 dividends in the past 12 months. ZIM passed our quantitative criteria with a QC score of 10 out of 12 with super low PE, super high return on asset, return on equity, and amazing profit margin. But those amazing numbers are mainly boosted by the rise in shipping demand due to the COVID-19 lockdown. Now, let's look at their income statement to see how different they performed before and after the outburst of COVID-19. If you look at their income statement in 2020 and 2021, the net income is amazing. $571 million in 2020 and $4.64 billion in 2021. But if you look at the pre-COVID data, they are making net loss in 2018 and 2019. So as the freight rate has fallen 52% from its all-time high, will ZIM have a net loss again? To have a clearer picture on whether you should invest in ZIM, I have ruled out 3 scenarios, which are the bear case, the median, and the bull case. First, let's look at the bear case. If the shipping company's capacity supply growth outpaces the growth in demand, the ocean freight rate may gradually go back to the pre-COVID level. If this happens, ZIM may make a net loss. And for a loss-making company, it won't be paying out any dividend, and I am unable to calculate the stock's intrinsic value to buy. Second, let's look at the median. Based on analyst forecasts in 2025 after the COVID-19 effects fades off, we take the $3.53 EPS to calculate the target buy price. We assume a 2% growth rate as per ZIM's forecast of volume growth, give it a 10 years of same growth rate with a 13% discount rate. And we assume the company to grow at 2% for another 10 years. With a 30% margin of safety, the target buy price will be around $20. Third, let's look at the bull case. Based on the same analyst forecast at the highest EPS of $10, we assume a 3% growth rate as per ZIM's higher range of forecasted volume growth. give it a 10 years of same growth rate with 13% discount rate. And we assume the company to grow at 2.5% every year for another 10 years. With a 30% margin of safety, the target buy price will be around $60.40. In my opinion, as the ocean freight rate is trending down, interest rate is going up, and with a high possibility that a recession is coming our way, I don't think ZIM stock is a buy now at the current price of around $30. If you have any other stocks which you want me to review, please comment down below or contact us via our Telegram channel and group. So that's all for today. Thank you so much for watching. I'll see you next time.